Hello, welcome to the Biz Boutique, Business Ideas and Solutions Boutique. I'm Noemi Rivera
and Digna Montañez.
And today we will be talking about deductions with Digna. We touched base a little bit before in regards to the different types of registration for your business and tax classification. Today, Digna is going to help us understand what deductions we can maximize for our businesses.
So that's the idea of reducing your tax liability is taking the right deductions that you're entitled to in your business. So let's talk a little bit what kind of deductions. The first one is the automobile. That's a question everybody always have. So what deduction can I take? As there's many questions about the type of vehicle and how they do it. So there's two ways to take automobile deduction. Two ways. One is direct expenses. Direct expenses meaning the gas that you use in your car, the repairs, the maintenance, the wash of the car, the tag, the interest if you pay a loan. All of that are direct expenses from the vehicle. The second way is mileage. That's just adding the mileage that you spend related to business miles, and that will request for you to keep a log of all the mileage that you put in your car related to business. When you use mileage, you do not take the other direct expenses because mileage is covering for the use of the car. So now, what car should I deduct? That's one of the questions that people ask. So people say, oh, I'm going to buy a car and deduct it entirely for the business. No, that's not completely right. If your business requires you to be on the street all the time and you're going to put a sign on that car and that car is completely used for business, then you can register that car under the business and deduct the expenses. And in that case, then you will deduct depreciation. So the value of the car depreciated over the years, and you can deduct the oil changes, the tag, the registration, the sales tax when you bought it, and all the expenses related to that vehicle. So in that case, you do not take mileage. You take direct expenses. An example of that would be like the truck drivers. The truck is dedicated 100% to develop that income, to generate that income, So you take that deduction for the truck completely. And in that case, that's the best deduction. The depreciation of the car and all the direct expenses, especially trucks, because trucks have many repairs and maintenance. They have many repairs. So it is important that we take the direct expenses for that truck. But if you're a salesman and you use that vehicle for personal too, then you have to determine a percentage of that car, of the expenses. You have to determine how much percentage you use it for business. Let's say you use 70% for business and 30% for personal. Then you have to separate out of, if you add all the expenses of the vehicle and then you take 70% of that, then that will be your deduction for the vehicle. And the same will apply to mileage. If the car is yours, it's in your name, and you're gonna deduct mileage, then if the car used 15,000 miles a year, then you have to determine is how many percentage would you say it will be for business and how much would be for personal. And remember that if IRS will ask, you have to prove how that percentage applies. Not that you just decide. It's just that be the closest that you can on percentage, because IRS can request how you use that percentage to determine the deduction.
And nowadays, there's so many great apps online to track your mileage. Would you recommend that someone who doesn't know and has already started their, enterprise, to go ahead, track their mileage as well as their expenses, get with an accountant such as Dreamline Accounting, and at the end, you guys do a really good way of deducing which one's going to be most advantageous for that business owner?
That's a perfect idea. You always have to keep your receipts. And at the end, when you go to the accountant, you don't bring all those receipts, all the gas receipts. You add it up, or you use one of those application, and every time that you put gas in your car, it will add it there, and you also keep the mileage, so you have both. And that's an excellent idea. Look online, there's many applications. I cannot specifically recommend one, but I know QuickBooks have one for self-employed to keep the deductions, and one is the mileage. So but it's many out there, whatever is simple for you, as long as you keep that record. And if you keep that record daily, or at least take care of that weekly, it will be a lot simpler than go to the end of the year and then trying to reconcile the whole year. So it is important that you keep that record daily or weekly, however is simpler for you and easiest for you to keep those numbers.
And I know for myself, I am old school, so I still have my Excel spreadsheet, and I keep all of my receipts at the end of the week. I plug those into my Excel sheet, and I also scan them for the week. That way I know I have them stored in, that if I need to recall them, it's super easy. I have a specific thumb drive that I use for my business, and all of the receipts that I have accumulated, as well as my mileage. So then at the end of the year, I send that thumb drive to Digna, or I can easily email her my Excel sheet and my PDFs for those matching receipts.
That's excellent. The better organization you have in your business is the best for you, because sometimes you go to the accountant thinking that we can create, or whatever you say. No, it's what you have, because when the IRS asks, they're going to ask you, not your accountant. They're going to ask you how you get that deduction. So you have to be very aware of where that deduction comes from, so you can give explanation and keep your records up to date and avoid many penalties and issues. So they disallow expenses when you don't have the right deductions.
Great information, Digna. Are there any other deductions that we should be aware of? I know many times we have, for example, our group that tends to meet either at a restaurant sometimes once a month. Are those the type of receipts that they can also put towards their deduction?
Yes, that would be meals and entertainment. So that's something that's an area that IRS look a lot too, because people like to take all those deductions. But be careful in that area. For the meal to be deductible, you have to write down on the receipt the person that you meet, talking about X, Y, Z for business. Of course, it has the date and the amount. 50% of that receipt will be deducted, but it has to be business related. So it's important that you keep record of that. So it's not at the time that you go to a restaurant and everything is deducted. You have to be reasonable, that you don't exaggerate on that number, and make sure that you write it down on the receipt, the person that you meet and the reason. Also be careful with those receipts, because they're thermal paper. They tend to erase or disappear the information.
Mm-hmm.
You should make copies of that, or just take a picture with your phone with your application, so you have it. So yes, it is important that you keep those receipts, and it is deductible as long as it is business related.
And so now we've seen so many restaurants move to a virtual, where you download their app, or you scan the code, you pay the receipt virtually. What I tend to do is then email myself that, print it out, write down the details that I need to, and scan that again, or take a picture and upload it to my file.
Yeah, and that's a good idea. And if you want to keep the file in the email, as long as it has your notes and the date specific and the business reason, that would be perfect. So you can have meal. With the meals and entertainment, there's also other activities that you can do related to your business, like to go to probably a dinner show, or you go to an event that is related to business. That's also deductible there, as long as business related. Everything that is business related will be deductible. But
so when you say everything, I know a lot of entrepreneurs, especially trying to expand their network, are joining networking clubs. Those are also tax deductible.
Yes, completely. If it's business related and you use it for the business, you can deduct that membership or the club that you belong, as long as, let's say, you paid a club membership to bring your customers there, and that's where you do most of your business. Of course, you deduct that membership completely. So if you play golf and you have meeting at the golf club and you do all of that, as long as it's business related, then you can deduct it.
A great reason to start doing business at the golf or at the yacht club, So enjoy the things that you love and just use them wisely, especially to your advantage within the guidelines. And that's why it's so valuable to have your personal accountant that you have that relationship with, that has a deeper knowledge of what your day-to-day activity looks like for yourself, for your business, so they can help maximize those deductions for you and your business.
And also advise you how to take care of that so you don't get, you avoid auditing, and if you get audited by the IRS, then you have your reasonable expenses and you will be clear on that.
That's great, Digna. Were there any other deductions that we may have overlooked?
No, there's many other deductions. So let's go other deduction. Of course, the office expense. Let's say there's two type of offices that you can have. You have a location in an office, and there you deduct your rent, your utilities, whatever you pay, your internet, fully. You deduct that is a fully deduction for your office. But you can have an office in your house, and that is called home office business. So that's a deduction that you have, and that is give you a little bit more complicated, because if you have an office in your house, there's many deductions that you're entitled to, but you have to know about it. Let's say that your office is a portion of a room in your house. So we go by a percentage. How that is calculated is they take the square feet of your home and the square feet of that office. Then when you divide those two, you will get a percentage, and you can deduct all the expenses on your house, meaning the utilities, the property taxes, the insurance, the interest on the mortgage, the internet. If it's totally related for business, you can deduct the whole amount. Or if you have a direct line in your home, that is deductible too. So all the expenses that you have in your home can apply by that percentage, and you deduct the maintenance of the house, the pest control, all of that, all the expenses that you have in your HOA community fee that you pay, that also a percentage will be applied based on the square feet of the house versus the square feet of the office. So that's the home business. So you can deduct all of those expenses related to that. And that's also, I'm talking about the space for the office. You can also, if you just depend, remember all those deductions depend on the type of business that you have. Okay. Everybody has different businesses and apply different. But let's say in your office you have a whole room, you can business pay you like a rental for that space, and that instead of taking a percentage of that, you just set a fixed amount for that space to pay you monthly. So your business will pay you rent for that space. And also when you have the business that you use like a storage, use a portion of the storage, that's a rental that you can get from your business to you. So that's another way to deduct. And again, depending on the type of business that you have, you can take that deduction.
This has been very informative and a wealth of information. So to recap, there are multitude of different ways that we can use deductions to maximize our tax savings for our business, including our business space, whether it be in home office or if we rent or lease a space. And that would include equipment and things of that nature. There's also deductions that are available for memberships. If you're part of some sort of networking or club, golf or yachting, where you also host business meetings. You also have deductions that are included for entertainment and for meals. So it's super important that you have an accountant that can guide you and structure you so that you know where you can take your deductions. If you're taking those deductions, how to file them accordingly, store it, annotate everything, so that you have all of your books in order.
And we will have more deductions. Stay tuned, because we're going to have many other deductions that you can take in your business. So we'll be connect again.
Absolutely. And one last thing, I wanted, just because we did touch on the vehicle and the home, with the vehicle, the auto insurance, business use versus a commercial policy, regardless of how you have that, if your vehicle is for business use, that insurance policy is deductible for you.
Completely. If you use the direct expenses. When you use mileage, you don't use anything else. But when you use direct expenses, then you use all the expenses related, the insurance and the taxes and all of that. But again, with the example that we gave on the truckers, the truck has a big insurance, so that trucks is go with direct expenses. There's no mileage there because the direct expenses is more serve more for the bigger deductions, so you can take all.
And that's a great distinction to make, and to remember that it's either the mileage or direct expenses, but you cannot commingle the two.
Exactly, just one.
Well, thank you so much, Digna. And if someone needs to get a hold of you, has questions here throughout the state of Florida, how can they reach you?
Okay, they can call me at 407-529-7772, or just shoot me an email at dmtaxes@gmail.com, or just visit our website www.dreamlineaccounting.com. Thank you.
Signing off here at the Biz Boutique, Business Insights Solutions for you.